So millennials are now in the prime home buying age, and so a lot of people are trying to become first-time home buyers. And so when I'm talking to a lot of the first-time home buyers, they're asking me about zero down loans because that is a lot of the programs that lenders offer. And listen, there can be pros to that, but there are also some cons. So we're going to talk through the pros and cons of zero down loans today. What's up, everybody? Mark Cannonre, your local realtor here in the Phoenix area, and we're talking about zero down loans today. And listen, there's lots of questions about it because some people just don't read far enough into the fine print, because I get it. A lot of the lenders are going to share how amazing it is, all this stuff, but there are some things you need to know that are cons as well. So we're going to talk through the pros and cons, and I'll be honest, I'll give my opinion on this, and I'm probably going to give more cons than pros, because I think there are some things that you need to be aware of as you look through these things. So let's start with the pros first, okay? So pros of zero down loans. Now let's talk about zero down loans for a second. They're typically FHA loans, which means, and a lot of people say, oh, FHA, that's first time home buyer loan. Like, a lot of people make that assumption, and I get that. FHA is a government backed loan. So being government backed, they're saying, hey, we're going to cover the down payment. And typically what happens with that is one of two things. They're usually saying you're going to have a higher interest rate, or some of the new ones I'm seeing, they're trying to have lower interest rates, but there's caveats to them. So we'll talk through some of that. But the pros for a zero down loan, obviously the first one is the biggest thing of, hey, I don't have to do a down payment at all. Zero money down. Okay, so now you're either trying to pay for your closing costs, or maybe you're having the seller pay for that, or whatever it is. So zero down, that is a huge benefit. And I get it. And it can be a very large benefit, because if you don't have 3.5%, okay, now we're looking at a zero down loan. So something to consider, that is a great pro. Another pro is some of the ones that they're offering right now are lower interest rates. So like, I saw one the other day, and they're in the 5%. I think it was like the high fives for the interest rate for a zero down loan. That's pretty good. Now, there are some caveats, and we'll talk about that. But right now, some of these lenders are offering lower rates for the zero down loans, and that can be attractive. So something to consider. Okay, so we talked through the pros. I know only two, but now we're going to give you three cons for the zero down loans. And we need to give a little bit of clarification on the first one. So the first con is going to be non-forgivable down payments. And that sounds really bad. But what does that mean? So when it comes to zero down loans, what is happening is the bank, the government, since government-backed loan, FHA loan, they are covering the down payment. So let's say 3.5%. They're covering that amount. So with some of these loans, you have to understand that they do not forgive the down payment. What that means is, let's say you go to sell the house in 5 years, some of them, you may have to pay that back when you sell it. Now, a lot of them have time frames. Like, I know I have one client, she did a zero down loan, and it was 3 years. She couldn't sell the house within 3 years. After 3 years, she could sell the house, doesn't have to pay it back. So that's where you have to read the fine print, because some of them, it could be longer than 3 years. It could be infinite. It could be throughout the entire length of the loan, or maybe it's 7 years, or maybe it's 5 years. So you need to look and see what the term is on some of these unforgivable loans, or down payments, sorry, because it's one of those of, okay, is that going to be something that I want to be able to deal with, or is that something I'm not comfortable with? The second con is going to be time limitations. So this is something I've seen recently with some of the newer zero down loans. So I saw a recent zero down loan where I think they were offering like 5 point something percent. I think it was like 5.9%, something like that. And it was zero down. Well, that sounds phenomenal, but there's always a catch. If it sounds too good to be true, it probably is. So what was the catch with it is you can't sell the house in the first 7 years. You can't move out of the house within the first 7 years. Whoa, hold on. And now here's the thing. On average, the average person who buys a house lives in a house for 5 to 10 years, somewhere in that range. I think the range is actually like 7 to 9. But this loan was saying, all right, like, you will have to pay us back if you move within 7 years. Now, it is prorated, different things like that, but okay, within 7 years, I told my client that. I was kind of reading the fine print and sharing that with them. They were like, oh, well, we're not sure if we want to do that. We might move within 7 years. And so they didn't want to have to pay that back. So something you need to consider, again, every loan program is different, but some of them were going to have those time limitations, like I was talking about with the unforgivable stuff, that you need to be able to pay attention to. Okay, so con number 3 is usually higher interest rates. So with these zero down loans, typically you're going to have a higher interest rate. Not always, like some of the new ones I was talking about where it might be a lower interest rate with certain terms. But typically speaking, when you have a zero down loan, because they're giving you the down payment, they are usually going to give you a higher interest rate because they want to earn that money back somehow. So that's usually how they do it. So let's say the interest rate's 6%. A lot of times you may have an interest rate of 8, 9%. I had people do that when interest rates were 3%. They got an interest rate of 5.5%, which at the time seemed high, but it wasn't. So the biggest advice I usually give to people, especially if you're a first-time home buyer or whatever, and you want to have this conversation of, I encourage people save up the money for the 3.5%. Okay, make sure you have that to where you get the best terms, to where you can get the best interest rate and all those different things. And there's more to it than just this. And I would love to have that conversation with you. Because if you're thinking about buying or whatever it is, reach out to me. My information's below. I'd love to sit down with you, make a game plan. Maybe it's you're looking to buy right now, or maybe it's in a year, whatever it is. I'm here to help however I can. So guys, you've been listening to The Real.